Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. Well, got some relief this week. Interest rates stopped the free fall, thank gosh. We made up a little bit of ground, only about a third of the ground that we've lost, but at least it's an improvement, and we didn't see interest rates continue the free fall, so that's going to be great. My title this week is Hang On, It's Going to Be a Bumpy Ride. This week was a better week than the previous weeks, but we're going to see a whole lot of volatility, and I'll get to that a little bit later on in the Java with Jared and what I'm recommending my clients do. But here's what happened with economic data, and then I'll get back to why interest rates really did improve this week. It wasn't because of the economic data, but I'll get to that in a second. But here's what happened with some of these numbers. Some good, some bad. Housing numbers, really strong. General economic data, not so much. We saw durable goods come in a little bit better than expected, but that number isn't a really important number. GDP is an important number. That came out, and that showed an increase of only 1.8%. That's a really weak GDP number. Expectations were for about 2.4%, so GDP, gross domestic product, was really weak, and that's not generally very good for the economy. We also saw the PCE index come out, and that stands for Personal Consumption Expenditure. That's the Fed's favorite gauge of inflation, and that was also really weak, only showing an increase of 1.1%. So it shows inflation is really under control. Generally speaking, that's a really good thing for interest rates. Now, we saw the economic data for housing really strong. The Case-Shiller 20-City Index came out for April. The year-over-year showed an increase of 12.1%. Huge number, giant increase. And actually from March to April, monthly increase was 2.5%. That was the largest increase ever for the Case-Shiller Index. Now, the Case-Shiller Index hasn't been around for a massive period of time, but it does show real strength to the economy, the housing market, which we all know is happening. We can see it on a daily basis. Pending home sales also came in with a blockbuster number. That showed pending home sales, homes under contract, an increase of 6.7%. So also a really huge number. The FHFA also came out with their number for the housing, and that showed an increase of 7.4%, and that just measures an increase in houses that have a conforming loan amount. So that showed that it's not a broad-based measure. Pretty good indication, though, that, again, overall housing is increasing. Well, why did interest rates get a little bit better this week? The Federal Reserve Board of Governors, the Federal Reserve is comprised of not only Chairman Bernanke, but there's 12 members in total. 7 of them vote. But there's, a bunch of people on that FOMC committee. And they were out in force trying to temper market expectations of what Bernanke said. Now, during the Federal Open Market Committee meeting and the statements that followed, or statement that happens afterward, the Bernanke's prepared statements were as expected, really no change. But it's when the Federal Reserve started the question and answer period that he went a little bit rogue, and that's what caused the markets to react, and that's what started the free fall, because the markets were interpreting that Federal Reserve Chairman's comment was that the Federal Reserve is really already preparing to stop quantitative easing or to begin tapering that, and the chairman kind of let out a plan of what that might look like. It really wasn't a plan. He was just kind of throwing it out there that when we begin tapering, this is maybe what it might look like. But the markets basically interpreted that the Federal Reserve was planning on doing this sooner rather than later. The Fed governors were out there saying, listen, that's not what's going on. We really need to see these numbers really warrant the easing, and we're not there yet. The economy is just too weak for us to begin doing that. And that caused the markets to at least breathe a sigh of relief. We saw interest rates improve a little bit, showing that maybe some of this massive movement was overcooked and a little bit of an aggressive stance, and that's probably true. But hey, listen, here's the reality. I think what the Fed chairman was trying to do is just basically prepare everybody that this is going to happen. We don't know when, but when it does happen, this is what it'll look like, but it's going to happen. And so kind of giving the market something to really prepare for. And that is what's going to cause a lot of this volatility, because the markets are going to really want to see or try to guess when this is going to begin happening. And it's going to be a bumpy ride. We're going to see big movements. We saw a big movement to the negative, and we saw a little bit to the positive here. And generally speaking, we need to make sure that our clients are taking advantage of these positive movements, because I think that we've seen the low of the lows. So we're going to be moving up in the years to come here. And our clients need to take advantage of these opportunities when they have them and get those loans locked. We saw a bit of a correction here to the positive side. Take advantage of it, get it locked in, because it's going to be a bumpy ride. We're going to see a lot of ups and a lot of downs. So that's what's going on with the economy. Hope you guys have a wonderful week. Next week, we're going to see on Friday the employment report, so I'll let you know what happens, because that's always a big number. Hope you have a wonderful, wonderful Independence Day here on Thursday. Let's hope all the fireworks are on Thursday, not on Friday after the employment report, but I'll keep you updated on what's going on. Happy 4th of July. Hope you have a wonderful weekend, and we will talk to you soon. If you ever have any questions, please give me a call, and thanks for joining me with Java with Jared. Talk to you soon. Bye-bye.